The fastest horse in 2025. Gold, Bitcoin, and the S&P 500 at full gallop, a quarter-by-quarter showdown in the global race for real returns. Flint West reporting from the muddy infield of the macro derby, where the crowd smells like cheap debt, stale liquidity, and sweaty central bankers. The race ain't over yet, but the blood's in the sand, and the hooves are thundering harder than a leveraged bond fund on margin call Monday. Welcome to the most explosive money race of the decade. Let's ride. Quarter 1. The shock start. The gates slammed open in January, and nobody expected what came next. Gold, old, heavy, and supposedly slow, bolted out like Secretariat on stimulants, clocking a 19.3% gain in Quarter 1. That's right, nearly 20%. Biggest Quarter 1 performance in 38 years. Every bullion bar in Zurich started looking like a heat-seeking missile aimed at fiat denial. Meanwhile, Bitcoin, the reigning champ, the maverick, face-planted right out the gate, down 11.8%. What happened? Blame it on early profit-taking, ETF digestion syndrome, or the fact that MicroStrategy's new Series F preferred notes hadn't printed yet. And the S&P 500, the Wall Street donkey in this race, down 4.6%. Slow, confused, and still chewing on Powell's higher for longer hay. Quarter 1 winner, gold. Quarter 1 losers, everyone still believing cash is king. Quarter 2, the comeback trail. Just when the bookies started calling it the year of the gold ox, Bitcoin came back swinging, like a stallion that took offense to its own reflection in the mirror. Bitcoin surged 30% in Quarter 2. That's not a bounce. That's a vengeance arc. A fiery run fueled by corporate treasuries waking up and saying, hey, maybe we don't want to die in dollars. Backing this bounce, Fidelity doubled down. BlackRock kept stacking on behalf of 401k zombies. And Fundamental Global tossed its entire $200 million private placement into Ethereum yield strategies, the cousin of the horse next door. Gold? Still climbing. 5% more in Quarter 2. Solid. Regal. Unbothered. Like a lion in the savannah watching Bitcoin flail its way back into contention. The S&P? Meh. Something like 6% if you squint and include dividends. Sluggish, but alive. Quarter 2 winner, Bitcoin. Quarter 2 loser, the illusion of risk-free equities. Quarter 3, the wild stretch. Enter the golden nightmare. Gold hit a new all-time high, $3,861.99 per ounce. Not a typo. Year to date, 42%. That's bull market velocity in a so-called defensive asset. They said gold was grandma's asset. Now, grandma's buying yachts. Backing this beast, Chinese central banks, hoarding like it's the new Silk Road. The BRICS Plus cartel, stacking bars in anticipation of a post-dollar world. Even Wall Street traders fleeing bond carnage for something that doesn't yield lies. Bitcoin held on, trading around $113,000, up around 21 to 25% year to date. Solid, but no longer the flashiest. The S&P, bless its boomer heart, barely limped to somewhere between 8 and 12% year to date, depending on which dividend sorcerer you ask. Quarter 3 winner, gold again. Quarter 3 loser. Central banks trying to hide their inflation scars. Quarter 4 forecast, the final stretch, picture it now. December 31st, 2025, gold at $4,250? Maybe. If the Fed pivots and the US debt curve folds like a dollar store deck chair. Bitcoin at $150,000? Quite possibly, if a major sovereign or megacorp like Apple or Exxon throws its treasury into the digital fire. S&P 500 at 7,000? Maybe, if you count prayers and buybacks as fundamentals. But this ain't just about price. This is about the prize. The prize, monetary legitimacy, global narrative control, real return bragging rights. If Bitcoin wins, it reclaims the crown as the fastest horse in the world. It will be undeniable. A decentralized, uncensorable, self-verifying asset crushed the legacy systems. Again. It would trigger a wave of digital asset treasuries springing up in Africa, Latin America, Southeast Asia, any place tired of IMF babysitting and dollar tantrums. If gold wins, it's a paradigm shift. It means the world has snapped back to ancient wisdom. That the barbarous relic is actually the foundation for the post-dollar global reset. The Chinese win. The BRICS laugh. The IMF sweats through its digital SDR prototype. If the S&P 500 wins, and that's a big if, it means the cartel of passive investing, military contracts, and political theater is still the heavyweight champ. not because it runs fast, but because it controls the racetrack. Global players implicated in this madness. China, backing gold like it's building a time machine to 1944 Bretton Woods. The United States, still betting on the S&P 500 because every retiree's portfolio demands it. Wall Street and BlackRock, holding every ticket. Bitcoin, gold ETFs, equities, and hedging harder than a hedgehog in a blender. Digital asset treasuries, the shadowy new entrants. Tech-forward firms holding Bitcoin on balance sheet instead of bonds. MicroStrategy, now Strategy Incorporated, still buying Bitcoin, still writing their own rules. Michael Saylor might be the jockey and the horse. Flint West, signing off from the track where monetary myths meet macro madness. The dust hasn't settled. The fourth quarter is still wide open. But one thing's for sure, this ain't just a horse race. It's a global referendum on the future of value. And if gold takes the prize from Bitcoin this year, it might not just be the end of a rally. It might be the start of a new monetary empire. Stay tuned, stay hard, stay liquid. Until next time, this is Flint West, reporting live from the end of your fiat illusions.